Today, silver experienced a sharp sell-off, and the move has investors asking a critical question: how does the relationship between silver and the US dollar explain what just happened, and what does it mean for anyone holding or trading silver? Over the past several weeks, silver prices had been climbing steadily, fueled by physical demand from industries like electronics and batteries, speculation in futures markets, and investors seeking a hedge against inflation and weakening fiat currencies. However, today, a sharp decline highlights the strong inverse correlation between silver and the dollar. As the US dollar strengthened due to renewed expectations about Federal Reserve policy and shifts in macroeconomic sentiment, silver became more expensive for international buyers, and global demand eased. At the same time, traders who had leveraged positions in silver futures faced margin pressure, forcing some to sell into the market, which accelerated the drop. This combination of dollar strength and technical unwinding shows how interconnected currencies and commodities really are, and why understanding the dollar's movements is essential for anyone investing in silver. Retail investors saw the sudden sell-off as a shock, but it's a reminder that silver does not move in isolation. It reacts to currency fluctuations, interest rate expectations, and macroeconomic news. Historically, periods of dollar strength have often coincided with short-term corrections in precious metals, even in the middle of longer-term uptrends. So today's movement is part of a pattern that has repeated over decades. For investors, this means staying informed about both the dollar RS trajectory and silver OS physical and paper market dynamics is crucial. It also highlights the importance of maintaining a clear strategy, whether that involves holding physical silver to avoid the volatility of futures markets, diversifying portfolios, or timing purchases and sales to account for currency-driven price shifts. In Part 2, we'll break down exactly what this sell-off signals for the months ahead, explore whether today's dip is a temporary correction or a deeper trend, and provide actionable insights on how investors can navigate this volatility without panic. Understanding the silver-dollar connection today can help you make smarter decisions, spot potential buying opportunities, and protect your investments from unexpected market swings. Because in the world of precious metals, knowledge about macroeconomic forces is just as important as watching the price chart. Now that we've seen why silver fell sharply in response to the dollar's strength, the next question is, what does this mean for investors, and how should they respond? First, it's important to remember that silver is a highly volatile asset, influenced not only by physical demand, but also by paper markets, currency movements, and macroeconomic news. Today's drop does not mean the silver rally is over. Rather, it highlights the need for investors to stay disciplined and understand the forces driving the market. For those holding physical silver, the sell-off could present an opportunity to acquire more at slightly lower prices, especially if the metal's fundamentals, industrial demand, limited supply, and geopolitical uncertainty remain strong. Traders in futures markets, on the other hand, need to be cautious because leveraged positions can magnify losses when the dollar strengthens and price swings accelerate. Historically, short-term corrections like today S have often preceded renewed rallies in silver as long-term demand. And macro trends reassert themselves, showing that these dips are sometimes healthy pauses rather than the start of a prolonged decline. Another key takeaway is diversification. By spreading exposure across physical metals, ETFs, and other safe haven assets, investors can mitigate the impact of sudden market swings while staying positioned for potential upside. Keeping an eye on the dollar, interest rates, and inflation indicators will also be critical, as these factors often determine whether silver remains a short-term speculative play or a long-term hedge against economic uncertainty. Ultimately, today, S sell-off is a lesson in patience and preparation. Investors who react emotionally may miss opportunities, while those who understand the silver-dollar connection can navigate volatility more confidently. In the coming weeks, monitoring how silver responds to both the dollar and broader macroeconomic developments will reveal whether this correction is temporary or part of a larger trend. By staying informed, maintaining a clear strategy, and watching the interplay between currency movements and metal demand, investors can turn today's market turbulence into a chance to strengthen their positions and make smarter, more informed decisions in the silver market, because in the end, understanding the dynamics between silver and the dollar is key to mastering precious metals investing.